welcome to the Closing Beat, everybody. I'm Dustin Tibbetts, financial advisor here with Jazz Wealth. Welcome, welcome. Happy Thursday. If you're one of our customers tonight, we have Wine and Wealth. Very simple. We're going to keep it very basic, but how do you know which investments to put in which accounts? Those of you that have different types of accounts, 401ks, Roth 401ks, IRAs, Roth IRAs, individual accounts, joint accounts, how do we make the most efficient use of all that? Going to keep it real simple. This one's really geared towards my beginner investors out there. So join us tonight. The email is already in your inbox. It will also be posted on the Dojo, which, by the way, if you don't know what the Dojo is, check this out. This is our video library and soon to be so much more that we offer for our customers. We update videos in here for different categories. We've got a geeky section, our Wine and Wealth replays, every class we've ever done, personal finance section in there, all kinds of videos in there. You can see there are just tons of them, as well as our complete budgeting class that is in there. So awesome, awesome. You know you guys have the invites to that. If you didn't get it already, let me know. Happy to send it to you. If you're not one of our customers, I'll just ask you, which financial advisor is actually asking for your business? I'm not talking about like an automated service. I'm talking about an advisor, somebody that's willing to help you. If you have a lot of money, then there's tons of people fighting over you to work with you. I'm not going after that crowd. I want to work with people that have $10,000, $20,000, whatever it may be. In fact, through the month of February, if you transfer an account with $20,000 or more, we'll credit back whatever the other place decides to charge you, because they're going to sort of hit you on the way out. Well, that's all I have for the sales pitch. We'll see you guys tonight if you're one of our customers, but today I've got to do something for all of you. That is review the markets here. So another down day in the markets. We covered this yesterday. You know why the markets fell today. There's no need to watch TV or blame it on Trump or blame it on China or whatever. You know exactly why the markets fell today, and if you weren't around yesterday or have never heard me say this before, banks and semiconductors. Simple as that, banks and semiconductors, and we'll of course cover it. Now from an index perspective, let's just hop on over to the charts here. Nah, that's the Dojo. Let's look at the charts. So the S&P 500, you're going to hear a lot of talk about the 200-day moving average. We've been mentioning it. It's right here. It's the red line on the charts. It's a technical area that traders like to use as support and resistance. It is very much acting as resistance at the moment. The problem now is the blue line, that's your 50-day moving average. You have a stock market that's in between the 200 and 50-day moving average. Anytime that happens, it is known in trader world as no man's land. Right? Nothing fancy. It's just called no man's land. And you can look back in history and see any time the price gets stuck in between that area, nothing real happens. You got some good up days, some good down days, but notice how there's really no progress there. Go back to any other point. When the price is between the 50 and the 200-day moving average, there's a moment in time where things are unfortunately just sort of quiet, called no man's land. Add to that we're in February, and my customers know that February is the least exciting month out of the year. It's a close tie for another month. You can guess which one that is. But we know that we don't really expect a whole lot. And now that you know that, you look at what's happened so far in February, this is the most exciting day we've had in the month of February. It's supposed to be quiet. Statistically, it always is. And that's how we work here, is based on stats. So market-wise, you got the Dow down a couple hundred, you got the S&P down about 1%, and the Nasdaq down just over 1%. Totally cool. You guys are prepped for it. You know exactly why that happened. Well, if you follow the headlines, you're going to see well, look at the chart down there on the bottom right. The markets were a little bit lower to start the day because of overnight. Look up top here, you can see all the overseas markets. Germany was lower, of course China was lower, France was lower. Who'd we leave out? Germany was the main one I wanted to point out. So everything basically started lower. Then you see that little slide there just after the morning started. We'll call it 11 o'clock. A little before 11 o'clock. That's Larry Kudlow. He was on TV, the economic advisor, saying U.S. and China are still far away from making a deal, which also led to the idea of, wait a minute, don't we have a deadline coming up? What happens if we go past the February 15th deadline? We know some tariffs double on China. Obviously, they don't want that. Nobody wants that. But because of that, you noticed Caterpillar, Deere, they all took a little hit here in the short term, as well as stocks that are exposed to China. Micron Technologies being one that's heavily exposed to China. So how quickly sentiment changes, right? Study this, right? Study this moment in time, because we've been going through this period of time where sentiment has been okay. The market's rallied back and everybody goes, hey, maybe things aren't so bad. How quickly all of a sudden we can go, well, okay, China issues, we got an economic slowdown, analysts lowering their earnings expectations for the first quarter. Holy cow, all this just hits in one day. Oh, and by the way, what happened to the wall? Why are we not arguing about a wall? Do you notice how Washington is right now arguing about extending Trump's little February 15th government shutdown thing? He gave them 3 weeks, right? Whether you're Republican or Democrat, you're both supposed to be working on the wall, not extending the government shutdown. That wasn't what we were talking about. You both agreed to go talk about immigration, whether you're going to work a wall out, whether you love it or hate it. They're supposed to be fighting about that. And instead, they're fighting about, well, hey, we want Trump to extend the deadline. No talk about the wall. I can't imagine the man saying, oh yeah, sure, let's extend it another 3 weeks because you guys have made so much progress. The point being, political news, economic slowdown, China trade deal, you got a lot of negative stuff hitting in one day. But the bottom line is banks and semis. So let's talk about it. Sector, oh, let me do the other indices real quick. Here's the Nasdaq, also in no man's land, also off the 200-day moving average. And the Dow, just above the 200-day moving average, did pull back a little bit. I kind of expect that you see that continue. If we look at the banking stocks, this is the XLF. These are your large banks, your global banks, your financial institutions that also are involved in investing and all kinds of other great things. Hey, they pulled back. What'd we say yesterday? They look a little tired here, not because it's my personal opinion, but because on the way up, the volume was dropping off. Today, you had a reason for people to sell, right? So over the last few weeks, we've been just sitting here at the highs with these banking stocks. Remember yesterday I said nobody cares to sell, nobody cares to buy more. We need more information. Today they got that. That's not good for the markets. We know you need the banks and the semiconductors to move the markets. If we look at the semiconductors, we mentioned yesterday, hey, this thing's extended. It's a little extended in the short term. It'd be normal for it to pull back. However, if it did pull back and the banks are showing weakness too, that's going to pull down the markets. You get it now, right? Where you can just look at two quick things and go, that's not good. I don't care what they're saying on TV. Now's the time to get all the bad news out. You notice how the timing works. I'm not a conspiracy guy by any means, but do you notice how when things get extended and everybody sort of knows we're going to pull back, now the bad news hits? Where was it last week? The government wasn't talking about the wall last week. They weren't arguing about the extension. Economic slowdown, where was that? Like, it did just happen overnight. The China trade deal, we knew about the deadline. How come all of a sudden it hits on the same day? It's just, think about it. Amazon is the best at that, by the way. When there's really, really scary stuff going on, they sneak out all kinds of bad news. They're really sort of the kings of that. Anyways, price of oil sector-wise here, keeping going with the different sectors of the market. Oil pulling back here just a little bit. That's a weak economic outlook. Again, when you have that news of the economy slowing down, global slowdown and everything, you have an increase in oil inventories here. 1.3 million barrels. We knew that yesterday, though. Doesn't matter. Oil's still higher by about 13.5% on the year so far. So not too bad, right? So that's really what I wanted to cover today, sector-wise. Now, stock-wise, let's talk about what you're going to see in the news. That's not it. BB&T, symbol BBT, if you're guessing there. Stock broke above the 200-day moving average today. Looking good. SunTrust, which is STI, by the way. If you're looking at that, that stock price was higher. They're merging, right? SunTrust and BB&T have said, well, we can't compete by ourselves, so let's partner up and let's conquer the world together. They want to focus on their digital platform. I think it was really smart. I also think it was really smart that these two are the ones to do it because you may or may not know, but over $750 billion in value, all of a sudden there's a whole new set of regulations that come on you. And this, I believe the deal, don't mark my words, but I believe this deal by merging only puts them at like 510 billion, somewhere right around there. Anyways, lower than the 750 billion cutoff, so they won't be regulated as heavily as some of the bigger guys. However, now they've got more opportunity, they've got more resources. It's not going to be easy, but they're trying to do it. The deal basically values the company, the deal comes in at 66 billion. Here's how this works. If you have one of these stocks here, what's going to happen is SunTrust stock owners are going to end up with 1.3 shares, 1.3? Just got to have your facts straight, buddy. 1.3 shares of BB&T. When you do the math, it's about $66 billion in conversion there. So just know it's another one of these examples where if you notice something changing in your account, it's going to be that merger as that goes through. Still a little bit of ways to go. I also thought it was funny, Wells Fargo, the stock sold off 2% today. Outage. all over. Online and mobile banking, you couldn't log into your accounts for a while there. I don't know if you still can, actually. Isn't that unique that that happens on the same day? Anyways, I'm not going to pick on them today. I'm in a good mood. Twitter, down by 10% on the day. Beat earnings. Revenue came in better than expected. Guidance. They guided on the lower end of revenue going forward. They also announced that they're not going to provide those monthly active user numbers, which is like a huge metric that everybody likes to focus on. Why? Why would you do that all of a sudden there? But they tried to sneak that in. That didn't work. They also mentioned their operating expenses are going to be higher by about 20%. Look, it just means the company is spending more money. It means that they're trying to grow. They don't have the ad revenue to offset it anyways. And if you look at the stock price, nobody has any clear idea what to expect out of this stock. So if you're thinking about investing in this stock, ask yourself, is it trending higher or is it trending lower? Right? All you want to know. If you're just going to be like trend is your friend kind of person, you can't make an argument to buy Twitter right here. If you're going to say I'm a counter trend person and I like to buy pullbacks, you can't really make an argument to buy it. So that stock also sort of in no man's land. Dunkin, DNKN, by the way, if you're trying to look up the symbol there, they reported earnings better than expected. Revenue was a little bit light. They missed on sales, right? Sales was a big deal there. They did increase their dividend by a few cents there, but bottom line, they missed on sales. You know who didn't miss on sales? Freaking Chipotle. I haven't been there in a while, but I've been thinking about it all day, to be honest. I just didn't have time. But stock broke out, hit over 600 as a high there, blasted their earnings numbers. Came in at $1.72. That was 35 cents higher than expected. That's a serious beat. We talked about it a little bit yesterday. Online sales did really well, 65% uptick in their online sales. If you happen to care, that means that Chipotle's higher by about 40% on the year. You know, the year just started there, so kind of interesting. A couple others, and I'll get out of your way. GoPro basically flat on the day, not too bad there. GoPro, they've been trying to cut their costs, right? So GoPro's not as exciting as it used to be. Sales were a little higher. They beat on earnings, beat on revenue, and apparently the cost cutting for them is working. I don't really have much else to say about that. Ford investing $1 billion in plants in Chicago. The important part that you may want to know is if you like the Aviator, if you like the Explorer, or you're a cop, that's what they're spending the $1 billion on. They're going to expand production of the Explorer, the Aviator, and those, they call them the police interceptors, which we don't have around here because for some reason where I live, our cops can afford $60,000 Chevy Tahoes. I mean, macked out, bad looking, trucks. Every one of them's got a Chevy Tahoe. I'm not sure how that works. Why are we spending so much money on that? I don't know. I'm not going to go there. It's a good day. It's a good day. Sears. Let me go here. Sears, it used to be the symbol was SHLD. Now you have to add a Q to the end of that because, look at what happened to the stock price. Anyways, shares higher by 30% today. It's official. Eddie Lambert has bought the company for $5.2 billion. The underlying argument there is he shafted the pension plans there. The Pension Benefit Guaranty Corporation is essentially having to take over all of the pension plans that Sears had. He got to buy the company and push out all those unfunded liabilities. You may hate him, but I think that's sort of genius. Not something that's going to make him too popular. Pension Benefit Guaranty Corporation, I've done a video on this one in the past. They're not funded by us, so you can't make the argument that taxpayers are paying for all this sort of, quote, bailout. All the people that participate, they pay into it. Taxpayers may end up paying for it. That could be a topic for another video. Mattel blasting off today here after hours. Closed at 1236. You're going to look at it right here. This is where it's at. It's 200-day moving average at the moment. Really, really good. I did a video on this a while back about Mattel turning the story around. It's taken a lot longer than I would have thought, but they are killing it on digital. Remember, these guys are trying to go digital. They just hired the Disney guy that used to work for Disney Channel. He was the chief executive over there. They pulled him on to the game there. So that further solidifies their sort of attempt to go into the digital world. Lastly, I'll point out OReilly. There's a fresh breakout. If you're a technical trader and you like breakouts on relative strength, you can argue relative strength here. You can argue a breakout. You can argue a very strong stock that beat on earnings today. And that also took up Advanced Auto Parts as well with a gain of about 4% on the day. So Did I bore you to death? Did I bore you to death, or did you get the gist of what happened today? You can walk away and go to a barbecue. Can you barbecue? Or maybe if you're in Florida, you can. Go tell your friends. The markets fell today because the banks and the semiconductors were overextended, showing signs of a pullback there. Show them yesterday's video if you want to share it with somebody. If you have any questions, I'll be happy to answer a few there. REITs. Yeah, we didn't cover REITs today. Yields, by the way, bond yields lower for the third straight day. So that's obviously helping REITs. If you follow like the ICF, that hit new highs today, cruising higher. The FREL, that's a Fidelity-based REIT. I'm not too familiar with the holdings in this one. That was higher, almost to new highs. Not quite, but still looking really, really strong on that one. You like Eddie Lampert? Thanks, Eric. I appreciate it. Disney, yeah, it's in the scroller, I believe, at the bottom. Disney says that their streaming service is their #1 priority, which it can be because they just spent God tons of money revamping their parks. I can't wait till it's done. They got these new gondola things that are going to take you from all the hotels. I've seen them. I've been there. They're almost done. I don't know why I'm so interested in that. You got the Tron ride coming up, and of course they got the Seven Dwarfs Mine Train. I could go off on this one for a while. I love me some Disney. So I won't. I appreciate all the compliments there. Mass Effect, stock updates are too short. Hey, I could go longer. I figure about 15 minutes is good enough. I want to include more of the technical stuff. Ikiana, what a cool name. I would like to include more of the technical stuff. That's what my passion is. It's what I like to follow up on. I just don't want people to get the impression that we're technical investors here, like for our customers. I know that gets misunderstood sometimes. We're long-term investors. So each one of our funds, by the way, is on our website with the objective on there, how we manage it. I put every last word that I could on there without getting in trouble by the SEC. I put the performance of our funds on there. Ask yourself, what financial advisor will do that? Prove what they do, good, bad, or ugly. I don't mind. I mean, if we have a bad month, I'm going to share it with you, but at least you'll know the objective there. Who does that for you, right? I thought about doing like a cheesy commercial here locally. We did a TV commercial last year. It was okay, went pretty well. I posted it on our channel. I thought about doing a cheesy one where it's like a car salesman thing and like, what has 2 thumbs and wants to work with you? This guy. Yeah, we'll see. I love it. Cool, well, I'll wrap it up there. Got to get back to work here. Remember, if you're one of our customers, if you can't make it live, that's cool. You don't have to check out the Wine and Wealth Live. It is on the dojo, always available for you. And by the way, the dojo, I don't know if you know this, but it's going to be a whole lot more. The goal is not to just make a video library. I'll leave it at that because I might get in trouble for anything else. Anyways, see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.